Good morning and welcome to the Locke in Your Success Options Trading for Income Weekly Update for March 16th, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk of loss when trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also please note that we are using hypothetical computer simulated trades and or results in the presentation. And the results are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to the website, check out our programs. Got the M3, the Bearish Butterfly, the Rock, the M21, and we have our one-on-one coaching programs, as well as the new stuff that we have coming out, which is going to include the SSS, which is going to be out in a couple of weeks. So that'll be good to go. We have the Advanced Position Management live seminar going on in May, the 18th and 19th. We still have some space available for that. If you're interested, please let me know. I should have sent an email out to everybody, but if I didn't get you, and you're interested in going, please let me know. Also, we're going to start working on the trading triangle stuff as soon as we get done with the APM. And then we're going to start some directional stuff and some options traders for beginners, so it'll be really cool. If you haven't done so yet, please come on over and join our mailing list so you can stay up to date with what's going on with what we have and get your free reports, 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. I have a quick question on what is SSS. It's just a super simple spreads trades. It's, I would say, a more beginner course. It goes towards people who are having trouble with the complexities of the M3. In other words, they're not quite up to the skill level of doing an M3 yet and really learning how to trade, and they're just having trouble, struggling to get profitable. Some of these are very simple rule-based strategies that work in a fairly wide variety of market conditions. One of the trades within that program is the V Condor. There's also 3 other trades that we're going to go over that are something I don't advertise regularly. Will there be a video for the APM strategies? Yes, the APM strategies themselves is more of an advanced M3 or advanced position management is what that means. So they're not necessarily specific trades. It's taking M3 traders up to the next level. The M3 program itself is designed for traders who come from the type of education background where they're just doing condors, or they're doing this condor strategy or that condor strategy or this butterfly strategy or whatever. And the M3 is designed to get you up to where you actually learn how to manage your position and trade properly. And once we get up into that level and get your mind opened up a little bit, we can take you up to the next level, which is going to be the APM, which is really cool. So that is what that's going to be all about, and I'll have what I'll do next week on the presentation, I'll have a more detailed look at what's actually going to be in that program. Right now I'm just trying to get the super simple spread strategies done, and once those are done, we will push into a little bit more information on that other program. Okay, so let's take a look at what's going on in the market. So last week we were thinking that the Russell, or the markets in general, were going to come down to just a support level. We weren't sure if we're going to stop here or maybe come down to our next level, which was the 1210 area. We just did. We popped down into the 1210 area. Again, that wasn't a big surprise, and then comes the bounce. So called that one fairly well here. If we take a look at the other indices, they did pretty much the same thing except for the SPX. The SPX broke down under support level. It bounced. This is technically a bearish pattern on the SPX short term. The Russell has a bullish pattern put in. If we come to the NASDAQ, this is essentially still a very bullish pattern for the NASDAQ. We came down to our support level. We bounced. Friday's price movement in the NASDAQ's a little bit concerning because it didn't continue through. However, this morning it looks like it's going to take that and continue higher. The Dow, again, we broke into a little bit deeper than I thought. I figured the Dow was going to stop here. Came a little bit deeper. That being the case, again, this is kind of borderline. In other words, I wouldn't call this bullish nor bearish. It's kind of like the market broke a resistance level. It came back up over it, and now it's kind of wondering what the heck to do. So this would be kind of neutral, and the Dow is just plain bullish here, at least short term. So what we were saying, I just have a question, is this latest pullback enough to reset? Yeah, 30% pullback, so we have 1150 to, just call it 1250, right? It's only 1245, but say, let's call this 1150 to 1250, a 30% reversal is going to be about 30 points. We had easily 30 points here. So yeah, that's definitely a reset in most of the indices. Okay, Curtis is talking fancy to me. He's saying futures up move this morning is more a reversion of the contract rollover. Okay, yeah, that is a contract rollover date. I haven't even looked at that. So they go from 1 month to the next. You'd have to see what the real the corrected value is for the futures rollover to be sure that they're up. And I did not check that this morning. So he's saying we're just back to the closing prices in the cash market from Friday. So if we open neutral here, well, I'll put it this way, not if we open neutral, but if we close neutral for the day, we do have some conflicting information here in the charts as of Friday. So like I said, this here, your typical support bounce is bullish, and you'd expect this to go to 1245. The SPX, when we come into the SPX, long term the SPX charts are bullish. I mean, there's no doubt about it. And realistically, you could set a trend line here that could give us a reason why we bounce that area here. Right, so that does make sense for the bounce. If you're looking at the very short-term charts, the fact that we broke a support level and we didn't break back above it tends to be a little bit bearish. So, like I said, a little bit of conflicting information there. Same thing with the Dow. A little bit of conflicting information with the Dow, with where this broke down. And again, I can make an argument that this is still bullish, whatever, but very short-term, this is not bullish. It's more neutral at this point. And again, the NDX didn't follow through, although I'd still call this a bullish chart at this point. So that's what we're looking at here. So let's move forward with that. And so that's so as far as what I'm expecting in the indices, I think we're kind of at a decision point because we have a bit of a mixture. We're a little bit out of sync here. I think the most likely thing is the Russell comes up and it at least tags its previous highs. And if it's going to roll over, that's probably where it's going to roll over, is right around 1245 and come back down. If we watch the other indices and they start breaking up past their previous support levels, then I would expect the Russell to continue higher. If they don't and they break down, we're probably going to run a little bit more into a sideways range here for a little while. So those are the two scenarios I'm looking at. So if we take a look at what we have on for trades, we had a March Bearish Butterfly that was actually closed early. So that trade is gone for the month. We also have this March V Condor, which as of last Monday looked like this. If we take a look at the charts, let me just back this out a little bit. So here, you know, nice looking trade. It's gone well this month. We've just essentially had this grind up. There hasn't been really any issues. I do have some guidelines as to when, which are going to be in the new SSS program and the V Condor program, as to when to widen these this straddle out. This is one of those guidelines in this particular trade, positive 50 delta, when we're at a certain spot in the V Condor. So I went ahead and took care of that and widened out the straddle, brought our positive delta down a little bit, and the new position essentially looks like this. So now we're starting to put a bottom in, yet we still have a chance to make more money if the market happens to go up. Let's just go to Friday, because I did do something on Friday the 13th. What I did on Friday is I moved this call a little bit higher. So let's go back a half an hour. So once again, we hit our maximum delta point, which again was plus 50 position where the market's positioned here. So I went in and rolled this call a little bit higher on Friday. Here's what we looked like before the presentation. Before the adjustment. It looks like this here. And after the adjustment, we're going to take this call and we're just going to roll it up a little bit higher. In this case, we rolled it to 1220. So I have a request of going back and seeing what I did with the straddle, so we can do that. We'll come back to Monday. So I apologize for moving fast, guys. So here we are. Here's our straddle. Here's our position. We're positive 53 delta. We're in the middle of the straddle, or we're not in the middle of the straddle, but we're on the certainly towards the call side of the call spreads. Here our delta is a little bit high. My concern obviously is being too high positive delta, coming back, losing too much money if the market retraces. So to deal with that, we're just going to take this straddle off and just roll it to a higher level. I don't remember exactly what level I rolled it to, but I think I went 10, 20, 30. I think I took 40 points to bring my delta down to where I wanted it to here. So I rolled it out 40 points into a strangle. 1, 2, 3, 4. And went into a position that kind of looks like that. So we're just kind of leveling off our delta a little bit here. Yeah, I do have a rule to move it, and it's going to be positive 50 delta. There's certain limitations and conditions to that number. In general, your number is going to be positive 50 delta. That's assuming that we're 20 points over the straddle. That's assuming that we're within a certain amount of expiration. And like I said, that's going to be in the V Condor program when we do that. It's too much to explain at this point. But essentially, most of the time, positive 50 delta, we're going to do that. So that's what we did there. And then Friday, we hit this number again. And we're going to go ahead and roll this higher once again. I think I went 20 points to the 1220 at this point here. So let me just look at the T-log. Yeah, that went up to the 1220. I didn't move the put strike because there's no point in moving the put. It's only worth 20 cents. I move it down, it's worth 20 cents. I could sell it and get my 20 cents. It's realistically not worth doing anything with, so we just left it alone. Yes, yeah, those movements are going to all be explained in the program. Yeah, and I'm going to talk to you. I mean, the SSS program is going to have trades that are very rule-based, and the only real subjective thing in the whole program is what do we do with this V certain times and depending on what's happening. And it's not even that subjective. It is rule-based, but there's just so many circumstances that you can come across that it's a little bit subjective as to you have to make some judgment calls on analyzing it. Am I actually better off to take this out and just completely take out the straddle, or am I actually better off maybe to widen it out to a strangle? Am I better off to roll just the call and leave the put alone? Like this is an example here where I'm better off to roll the call. There's no point in executing a put roll because there's no benefit to doing it, right? So in a manner that's a little bit subjective. It is rule-based, but it's subjective as to whether to move the put or not. In here, I probably wouldn't do that. But we do go over multiple examples with this, doing it both with the Russell and with the Russell IWM combination, as well as how to track it with the IWM combination, so that you can do that a little bit more effectively, and all kinds of stuff like that. So anyway, that is the V Condor trade. Let's take a look at the other two trades we have open for March, and one is March M3. Again, I'm going to go back to Monday afternoon before we did anything. Actually, we didn't do anything Monday anyway, but we'll go back to Monday afternoon anyway, and we can take a look at our March M3. Here is the position we were in. Let me just fix our matrix. So the trade's up about $3,800. We're actually positioned fairly nicely. We're starting to have a gamma trend issue going on here. I could fix this now, and again in the APM program we'll be talking about how do I fix this gamma trend problem without taking on too much downside risk in the process, which certainly can be done. But like I said, we'll show you how to do that. But anyway, there's really no reason to do anything here because the gamma trend's not that bad. So no movements here. If we go to Tuesday afternoon, so here is Tuesday afternoon, and our positive delta, maximum positive delta on this M3 has obviously been exceeded. We're up over 100 delta here, which is more than double what we're looking for. So what we're going to do is make a downside adjustment, and all we're going to do is we're going to roll this back. So we're at the 1200s right now with the butterflies. We're going to roll this back to the 1180. We're going to add 1180, 1210, and 1180, 1220 verticals. Brings us to 34 delta, which is within our delta guidelines, yet still positive. And again, this is what our profit and loss looks like here. If we go to Wednesday, there were no adjustments Wednesday. Nothing was needed Wednesday or Thursday. I held this position till Friday. And this was essentially above our profit target, I think, on, oh, this is Thursday. Okay. So here's a position as of Thursday. With the extension, we're outside the tent. Our vega is still negative. Our delta is still under -50. We're looking in a position that looks like this, so that looks perfectly fine. There's not necessarily a reason to do it. If I was a little bit concerned about my vega being low, I could have done some verticals in here to level that out. That would be outside the guidelines, but it wouldn't be an unreasonable adjustment at all. But as of per guidelines, there's nothing to do here. And then Friday, this was pretty much well above profit target all day. So if you see the market pull back, up here we're 52. This was up as high as like $6,000 profit. I was watching it through the day, monitoring it. I ended up pulling this off at the end of the day at, let's see what the actual number was. I'll show you the T-log also, but here's the report. So we just had that adjustment on Tuesday, and this was pulled off for 51.43, which was a profit target number on Friday. And here is the T-log with that. I just have a question on, does a V-Condor generally have fewer adjustments? Yes, it usually has a lot fewer adjustments. Is it statistically hitting its profit target as often as the M3? No. Anytime you take a trade that's rule-based like that, it's going to have less of a performance level in different types of markets. So when the V-Condor is in its environment, it does very, very well, like a 2013 environment, extremely well. When it gets into a choppy environments like early 2014, it's a little bit challenging for a trade like that. And like, again, those are all things that we explain within the program too, is what conditions are good for certain, for the certain trades where we have. Like I said, we have a total of 4 trades we're going to be showing you. All right, that is the M3 trade. So we're closed for the month. We're out of the Bearish Butterfly at, I don't remember what the profit number was there, but it was a decent profit. It was closed early due to the 21-day expiration guidelines, and this one here is pretty much a profit target. So nice trade on the M3. The Rock trade, which was very similar to the M3, is a little bit different. Let's go to Monday on the Rock trade, show you where we were with that. So yeah, nice out. I just got a comment. Nice M3 outcome. Mine is still open at $4,100. Looking to hold it till perhaps tomorrow. Yeah, so we'll see. Yeah, there's no necessarily reason that you had to get out of it on Friday, but $4,100 profit on it. I'm assuming that's a $50,000 position. Is good. I mean, that's a good month for the M3. So all looks good there. This Rock trade was obviously started as an M3. It was started a little bit later in the cycle. At this point, it's up about $4,000. We are minus 47 delta on Monday, so that all looks good. On Tuesday, oh, I'm sorry. This is the March M3. Let me go back to the Rock trade. I thought that was up too much money because the Rock trade, the M3 wasn't up that much. I mean, the Rock trade wasn't up that much. So back again, here is the Rock trade. We had rolled this back earlier, and we rolled back all the way to 1180, which we did end up doing with the M3 trade on Tuesday anyway. But this trade wasn't up as much money. It didn't need any adjustments till Thursday. So let's just go to Thursday at 1500. Again, we're outside our 1230 level. we're sitting here minus 78 delta, which is a little too much. So I went in and did some 1210, 1220 verticals, which you see with that move there. That brings our Vega a little bit more negative, brings our delta a little flatter. This is what the position happens to look like here. So, people ask me, am I fine outside the 10th 7 days to expiration? Yes, I am. If I can hold my Greeks, perfectly fine with that. So going to Friday, we'll show you how the week closed out. So here we are, 1231. We're up about $3,800. All our Delta Vega numbers are looking fine. Here is what the position looks like as of Friday. Now, this being a rock trade, if the Russell happens to shoot out up and close over my 1240 level, I can convert this over to a rock trade and trade out the week that way. Let's see what happens. If it happens, then we'll go ahead and do that, assuming we have time value to do that. Sometimes this close to expiration, depending on the day, in other words, if it happens today, that's one thing. If it happens on Wednesday, that's another story. If it happens on Wednesday, I'd probably just close the trade. Monday is I'm still going to have enough time. And the question becomes is when is it too late to convert into a rock trade? And that's when I come here and I decide, for example, if that day was today, I come here, I do my 1210 butterflies, I take a look at my 1230 butterflies. If my 1230 butterflies happen to have, 1210, I have to go to 1250. If my 1250 butterflies happen to have no time value in them, then there's no point in doing that, right? There's no point converting into a rock trade because there's no benefit to it. So here, right now, the 1250s have 360. Maybe, for example, if they had 60 cents, there's no point in doing it. So that's why we did that. Not clear. Why did the rock not do as well as the M3? Well, two reasons. Number one, it was entered at a different time. So it was entered at different strike levels. And the M3 was actually up a reasonable amount of money when the rock trade was entered. So time for time, the rock trade did do as well as the M3. It just started out late. And plus it was rolled back a little bit earlier because it was at different strike levels. It was rolled back at a different time, I believe. If I went back and checked I'd have to go back and recheck the trades to tell you the precise answer why. But yeah. Sometimes your rock trade is going to be positioned slightly different than your M3. Sometimes your M3 is going to be up money when the rock trade's entered. Sometimes your M3 is going to be down money when the rock trade's entered, if it happens to be entered as M3, and that's all going to play into effect on how well you do on exact timing. When I add, well, yeah, the margin may be higher. I may have entered at am I actually over a margin here? No, I'm not. Sometimes option view miscalculates your margin. It looks like I'm actually, let me put this out. Option view's got a lot of good things, but has a lot of drawbacks too. Yeah, so I'm actually within margin. I'm 49,000. If I do have to do certain things, like another vertical or something, I may end up having to do some margin control here to stay under. But as of right now, we're within margin limits. And yeah, it's very possible it was higher than the M3 trade. I may also have because of when I entered, I may also have a call at a different strike. So that all goes into that. When I add verticals to my M3, my maximum loss on the left side of the graph goes way down. Is that normal? Yeah, yeah. As you add verticals, yeah, so it's almost the same question. As you add verticals, you're going to take on more and more risk down here. You can control that number. In other words, you can control how much, there's lots of methods, again, which come into the APM course on how to control your margin in the M3 trade when that happens. Okay, I think I'm going to have some questions coming up, but for now, this is what we look like on the rock trade as of Friday, and we'll quickly go into our April positions. So for April, we have a bearish butterfly open. So let's go to the April bearish butterfly. This bearish butterfly has had no adjustments for a while. Let's see, we came into the trade with the 1200 puts. We ended up rolling the position to 1220 we ended up rolling the position to 1220 to deal with the delta theta ratio issue. And now we're just sitting at this 1220 level. We have an add point at 1240, which we may or may not hit today, so we'll just take a look at how that goes. As of right now, it's slightly up money as of close or the end of the day Friday. Like I said, if we have a clear close over 1240, then we're going to enter the 1240s. If we have a delta theta ratio problem there, we will deal with it at the time. But as of right now, everything looks fine. We have, all right, so here are some questions coming in. If REC closes near all-time highs today, would it be a good time to put on a May bearish butterfly? May is 63 days to expiration. Well, let's go through the positions before we get into those types of questions. So there's the April bearish butterfly, no adjustments. We also have an April M3 trade. Again, no adjustments due to the volatility levels when we entered with some extra contracts. It's going to cause a gamma trend problem. If we get too close to expiration, it may also create a issue with capital if we have to do a lot of verticals with this, in which case we'll drop down to our regular size. You can see the great gamma trend problem starting to develop here. When our delta number hits a problematic level, we'll start to straighten that out. As of right now, there's really no reason to do anything for guidelines, so we'll do that. Let's go to, so no adjustments on the April M3, and the last thing we have is an April V Condor on, which again we had no adjustments, so I'll just show you how we're doing there. Here is our April V Condor. It's up about $1,000, $1,400. It's looking perfectly fine. Hopefully for this trade you get a creeping up market and the market closes up in here somewhere and it does it nice and slowly like it's been going. That would be the best scenario for a V Condor type of trade, but as of right now there's nothing to do. So let me just take a look at some questions that we have here. If Russell closes at all-time highs, is it good for a bearish butterfly trade? Well, we had a bounce to, excuse me, a bounce to 1205 to 1245. That's 40 points. That's what I would call a marginal entry. So it's not a reason for me to jump in early in a bearish butterfly trade, but it is a reason for me to, but it's a better entry than it is now, right? So, you know, where do I want to go to a bearish butterfly trade? If I'm up like 10% or sometimes 80 points, so, you know, something that might cause me to jump in early is we're up at the 1280 level. That would be a reason to jump in early. This isn't really a reason to jump in early. If you wanted to take a directional shot, that's fine, but I probably wouldn't do that. So let's take a look at what we have going on next here. Wondering if you or anyone has looked into hedging the TF instead of deep in the money call for better margin and delta purposes. I have some students who that's an option that you have. You can do a delta correction with a TF future. Nothing wrong with doing that. I have students who do that. I still prefer doing the call. A call has advantages that the deep in the money call has advantages that TF futures do not. And you know, it can take a little bit to explain that, but I have volatility advantages when the market comes down. I don't have the unlimited risk that it's associated with the TF future, with the deep in the money call. So yes, they may margin me better, but my actual risk, if I have a catastrophic market event, is a lot more with the futures than it is with the call. So there's pluses and minuses to doing it either way. The bigger question is, what are my pluses and minuses to hedging with the TF call versus maybe IWM stock versus maybe you know, a deeper in the money call or a closer to the money call or a synthetic long position. There's all a bunch of ways that you can hedge this thing. They all have advantages and disadvantages. So either way is fine. So the question for the April bearish butterfly, do I see an extraordinary upside risk in the rut up to 1275 to 1290 for April? Yeah, well, from a price pattern standpoint, the next move in the Russell is going to be to, if we break higher here, a normal, quote-unquote, normal next move for the Russell is going to be 1280. So that being the case, then yeah, I think there's a reasonable possibility that we may go up that high. If I stay a third in the bearish butterfly, are there any major drawbacks to ignoring the delta theta and the roll points, et cetera, et cetera? Yeah, if I'm a lot of times, especially early in the trade, if I'm hitting delta theta ratio limits, I'll hold on a little bit before rolling it, let it work itself out. There's no real major. The only major drawback is if the market stalls and sits. If the market stalls and sits, you're not collecting the theta number you're going to collect if you had rolled up the butterfly. In the other two instances where the market really takes off to the upside or the market drops to the downside, you're actually better off staying in 1/3, not rolling. So again, everything has pluses and minuses. Just like we're talking about using futures versus a deep in the money call versus stock. There's nothing wrong with doing either thing. They're both fine. It just depends on what you want to create when you're trading. You just need to understand, by rolling this up to a delta theta, what am I doing? And if you want to match that to what opinion you might or might not have with the market, you can do that. But you're just saying different things by rolling it up versus leaving it alone. So leaving it alone, you're better off for a bigger move if you're expecting an increase in volatility. If you're expecting a decrease in volatility or the market not to move much, you're better off to roll. Okay, so how wide was my V condor put side vertical? Well, my V condor put side vertical should have been 30 points on the April. I don't know what it was. I'm hoping it was 30 points. Otherwise, I goofed up. 10, 20, 30. Yep, so 30 points wide. And I believe that's all we have for questions today. I thought Jan was going to put in a couple questions, but I haven't seen her. I haven't seen them. So I know she does have some questions. Jan, I know you have some questions with me via a email, and I'll do my best to get back to you on those. I'll do my best to get back to you on those personally, maybe later today or tomorrow. All right, so that's it, everybody. I hope everybody has a great week trading, and we'll see you next week.